All right. Good morning, good afternoon, good evening, depending on where you're watching me from. Today, I'm going to review the markets. I have about two main scenarios which I'm going to review, and that pretty much is going to be it. Okay. So, what you have here is kind of an overview just to let you know that the market is still in an uptrend. No matter what's going on here, the market is still an uptrend. And I'm thinking this is some form of ending diagonal where you have ABC, ABC, this, ABC, this, ABC. Okay. So the market is still an uptrend, and personally, I expect that we still have one more high to go before we now have a very major breakdown of the market. That's my own personal analysis and thought process. I may be wrong, but that's what I think, and I've had that belief for a while now. Okay. So now I'm going to take a look at the bear case. Okay. So what we have here is some form of a complex corrective structure. Okay, a WXY. So I don't want to bore you with all the details. What you have here is a WXY, and I'm still expecting that we're going to have a turn here and then come down. All right. So this red box area is where I'm expecting a turn, probably today, which is Monday for me, or maybe tomorrow, I don't know. But pretty soon, I'm thinking that we're going to have a turn here, either immediately or the market goes up a little bit and then heads down. Now, I'm going to zoom out here so that you can see where this terminates. You can see some form of confluence. All right. So let me zoom out a little bit. So you can see it stops around an area of major support and resistance. So always look left. All right. Always take a look left. So I'm going to move this here, quite frankly. Move it up here. Good. So you can see this is a major area of support, another area of support, which initially was an area of resistance. Resistance turned support, and we are coming back to test it again. All right. So this is my main scenario. I may be wrong, but this is really what I think is going to play out in the next few days or in the next few trading sessions. All right. So this is my immediate bearish scenario. After the market comes down, we could head back up, or for all you know, the correction could continue, in which case we have WXY, then we go up again, so maybe somewhere around here, and continue heading down. So it's going to be something like this for the worst case. So it's going to be something like this. This. Just keep going down. All right. So that's something to take note of. If the market comes down here and starts heading up, you want to be careful. Once you get to the 0.5 or between 0.5 and 0.618 Fibonacci levels, you want to exit and take your profit and observe, okay, because that's what we call the golden zone. So you do it like this. You see, it's still around this area of resistance and area of support. You to come back here, most likely start heading down, or it will break through and the correction will be over and we are heading up. All right. So this is the bearish scenario. The best case, WXY, and we head up. All right. Or WXY, we come up again for another X, and then we head down again. All right. So it's going to be WXY correct structures. So it's going to be WXY corrective structures going down. If that is the case, so you want to be careful. If the market comes down here, when it bounces back up, you want to take your profit here, and if the market reverses, you go short again and take it down. But if it continues moving, breaks through this, comes back and tests it probably, and then heads up, then you go long. Okay. All right. Okay, so this is the bullish scenario, and the assumption here is the indices have made some form of a double bottom here, and we are done. You have a WXY, and we're going up, and what I think will happen will be, we get somewhere here, we have a pullback. As you can see, there is this trend line from here to here, and that trend line has been broken. So we come back and test the trend line and then head back up. So once this, what I will call a neckline, or once this resistance point is broken, I think then you can go long. All right. And if you want to be a little bit more aggressive, you can go long. Once this trend line is broken. If you also want to be a little bit more aggressive, even further aggressive, you can go long. Just hold on here. So if you want to be even ultra aggressive, you can go long once this trend line is broken, and you set your stop loss below this point or below here. Okay, so that's the plan in case we are done with this correction. Let me delete this. So we break through a little bit, come down, test the trend line here, and so we break out a little bit, come back, test the trend line, and head back up. Another option, quite frankly, is it just continues heading up, in which case you wait for a pullback somewhere and you go long. Okay, probably after this is broken. Okay, so this is the bullish scenario. I hope you got some value from this. I wish you all the best in your trading session this week. Please trade very carefully. Again, please like my videos, subscribe, share. This helps me a lot with the algorithms. I really appreciate your audience. Thank you very much, and I wish you all the best. God bless you.